My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, but trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Professional money managers, you know what they hate being? They hate being confused. They would rather be emphatically wrong than acknowledge they don't know what they're doing or what's going on. So the pros have all sorts of totems to help navigate confusing situations. Think of it as a playbook. And they're constantly consulting the playbook on days like today, where the Dow lost 112 points, S&P declined 0.35%, NASDAQ dropped 0.60%, and a lot of those real high flyers got crushed. For example, when inflation rages, the first thing you're supposed to do is sell U.S. Treasuries. Second, you sell stocks with high-priced earnings multiples because they trade on future earnings many years down the line, and those future dollars are eroded by inflation. Third, you hunker down at the short end of the yield curve where you won't get hurt when the Fed starts raising rates. There's only one problem with that. Not one of these plays is working. We're getting some hardcore inflation numbers that are very hard to explain. The high multiple stocks got hit, okay, but treasuries went up in value, okay, incredible. Now, get this, it's going to get even more, I don't know, nauseating. I expect tomorrow's consumer price index, the CPI, I expect the reading to be outrageously high, red hot, smoking. And it's going to be led by, of all things, used cars, because there are no cars to be had, of course, because we have a semiconductor shortage. But the response is not what anybody seems to expect. Bond yields are supposed to soar in response to inflation, right? Rates are supposed to go higher. Instead, they're plummeting. And that's making stocks that have good yields more attractive by comparison. What's happening here? Why isn't the hedge fund playbook working? Well, first and foremost, we've got some outside forces that we don't talk enough about. Now, our U.S. government bond market is the best and deepest bond market on earth, which attracts money from across the world because our rates are higher than most first world nations. Even down here, our bond yields are too competitive to ignore. Money can just be transferred so easily. It's such an easy thing to send a wire for $1 billion. Consider our Treasury markets a magnet for overseas billions. Second, speaking of global context, here's something we never talk about. You think we've got inflation? Overseas, it's much worse. People often forget that America is blessed with tremendous natural resources, especially natural gas. We have the wells and the pipelines to power and heat most homes in America. But skyrocketing natural gas prices are wreaking havoc on just about every other country on Earth. And so many of them need to import it, and we're the only real supply. Not here. We don't need to. Even with prices higher, well, we have no shortages of natural gas in the United States. Sure, the price of gasoline is higher than it's been in years, but historically, though, it's not that bad, especially when you remember that cars are much more fuel efficient than they used to be. Plus, in the end, we've really got energy inflation, while the rest of the developed world's got an energy crisis. Third, this action in the bond market's screaming, slow down, as in the economy's about to crater. But the action in the stock market says all systems go. Maybe stocks are right. Maybe bonds are wrong. Fourth, maybe bond yields are plummeting here because Fed Chairman Jay Powell is right that the current bout of inflation still, after all this, is transitory. That means the price increases we're seeing now, well, they could be the peak. And tomorrow's CPI number is actually already out of date. I don't think anyone outside of Jay and me really believes this anymore. Right? Jay seems like he's wavering. I'm steadfast. Finally, don't forget that these stupid CPI estimates are made by clueless economists who refuse to account for the obvious. We, you and I, know this number is going to be red hot, a smoker, yet the commentary will be about how much it's worse than expected because these economists don't know how to forecast. They keep lowballing inflation. Almost no one on Wall Street believes in their estimates. The numbers will only be worse than expected because we have the worst people setting the expectations. So how do we make sense of these confusing scenarios? Simple. You can't. It's impossible to make sense of this market for this huge run, and at this very moment, the sooner you acknowledge that, the better. Given that this market's been rallying almost nonstop with different leadership groups every day, today was housing, even as the broader averages got hit, you should just let things play out, okay? When the action is totally contradictory as it is right now, you can't just pick a side and say that's right. You have to wait for the market to give you a clear verdict. You can't give the market a verdict. It doesn't work like that. When I was a hedge fund manager, I often felt compelled to do something, anything, in order to take advantage of the pullbacks. But there are some moments like this one where you're doing that pullback buying is a mistake. Sometimes you just have to sit on your hands and wait for some clarity. So I'm going to give you really a painful example. I talk a lot about the charitable trust. I talk a lot about the new club that we started. I'm very proud of it. I don't talk enough about some of the stocks that I got wrong. I talk about a lot of stocks I got right. Let's go into something that was miserable for me. Let's talk about the obliteration that was PayPal. Last night, PayPal reported a subpar quarter. This period was distorted by the company's endless breakup with eBay. Years ago, they were part of the same company, and they still had a good relationship until now. Well, it's probably a good relationship, but it's certainly not helping PayPal as eBay breaks away. Management talked about a slowdown during back-to-school season, even though back-to-school was pretty good for many retailers. Most companies would kill for PayPal's growth, don't get me wrong, including the possibility that Amazon will let you pay for things with Venmo. But for this company, this quarter was a big disappointment. Now, normally, this is exactly the kind of thing I'd be looking for to buy here. A high-growth company with what seems like a temporary glitch. Dan Schulman has pretty much assured that to you, the CEO, and it's in the penalty box for who knows how long, maybe not that long. It's not often you can buy such a fast grower down here at 33% from its high with such a great balance sheet. But I can't recommend PayPal here today. I can't, and I didn't in your bulletins if you're a member of the club, because the macro picture is just too dicey, too murky. I suspect you could get a better chance to buy this beaten-down stock, which is why the charitable trust is waiting for it to go lower. Our investment club will keep an eye on it for you. If you want PayPal, I'd wait to see if this level holds before you pull the trigger. If it does, then we probably will buy some, but we can't yet. I want to call in the overall market because PayPal stock is no longer strong enough to buck the overall trend. Mea culpa. I thought the company, which I've liked since it was at 30, would be stronger than this. I was wrong. All right, how about NVIDIA? Got that right. CEO Jensen Huang just gave his keynote, which was heavily oriented toward artificial intelligence, including self-driving cars. The stock was initially up huge in pre-market trading. I hate that when that happens. Then it reversed, ultimately giving up all of its gains and then some. Don't buy those stocks that are up big at the opening, please. So now, though, that it's down, buying opportunity? No, too vulnerable. There won't be a second keynote tomorrow. So the people who bought it today at the top, they're going to just bolt. Okay, that's what happens. Those people who pick some up right here, see, they're wearing it. That's what we used to say when we did. Hey, that guy's wearing NVIDIA. Well, you know what? You take NVIDIA off at the end of the day. A stock that climbed endlessly like NVIDIA is tricky as a stock that's plummeted endlessly like PayPal. If you haven't bought it when we said buy it for the trust, now you got to wait for a pullback. How about AMD? Another longtime Cramer fave that we own for the charitable trust. Stock skyrocketed yesterday after they landed that fantastic deal to supply Facebook with chips for the metaverse. But I can't recommend that up here because the catalyst is now gone. Another wait-and-see situation. Now, these are three fantastic stocks of amazing companies that I love to buy on weakness normally. If we have more clarity on what's happening in the economy and the market hasn't already run so much. But we've had that monster rally already. And we can't truly explain why bond yields keep sinking at the same time that inflation's raging. Rather than making a hasty, ill-informed decision on the spot to say, you know what, we got to pick up some AMD, I'd rather just wait till we get more insight. Or, to put it another way, back when Karen Cramer and I ran our old hedge fund, whenever I'd be jonesing to buy something into a sell-off like this, she'd print out 10 stocks with charts that look buyable. But there was one exception. On days when we had zero macro clarity, she wouldn't even give me the charts. Instead, she'd say, just go to the movies, will you? There was a stretch where I must have seen The Fugitive with Harrison Ford half a dozen times before we finally got some clarity. Yeah, I don't care. So you want to figure out this market? Hurry up and wait. In the meantime, go to the movies. I hear Done, surprisingly not awful, unlike the David Lynch version from the 80s. The bottom line, sooner or later, the market will make up its mind, and then you can make up yours. If you haven't sold any stock to raise money, maybe you take a little off the table. You got my permission. The setup's just a little too confused here, frankly. So it's good to keep some cash in your pocket until we stumble onto enough clarity to start making sense of the situation. There, I said it. We don't know what's going on. What the hell? Why not tell the truth? It's kind of my stock and trade.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.